What if the same central banks that once called Bitcoin a scam are now secretly buying it by the billions? What if the institutions that printed endless money, crashed currencies, and laughed at crypto are now quietly stacking sats in the background? This isn't a conspiracy theory. The data is there, the on-chain signals are there, and once you see it, you cannot unsee it. Let's talk about what's actually happening in 2026. For years, Bitcoin was the enemy of the establishment. Central bankers called it a Ponzi scheme. Finance ministers warned their citizens to stay away. The IMF threatened countries that dared to adopt it. But something changed, and it didn't happen overnight. It happened the same way most massive shifts in history happen, slowly then all at once. To understand why central banks are buying Bitcoin now, you need to understand why they bought gold for hundreds of years. Gold was never just a shiny metal. It was a trust mechanism. When two countries didn't trust each other's paper promises, they settled debts in gold. It was neutral. Nobody printed it, nobody controlled it, and in a world full of political games and currency manipulation, neutrality is worth more than almost anything. Bitcoin is the digital version of that neutrality. Think about the world right now. The US dollar still dominates global trade, but that dominance is cracking. Countries in Asia, the Middle East, and South America are actively trying to reduce their dependence on the dollar. They've watched what happened when Russia got cut off from SWIFT in 2022. They saw how Western nations froze sovereign reserves, and they took notes. Very detailed notes. If your country's reserves can be frozen by a political decision made in Washington, then those reserves aren't really yours. That's the brutal truth. And central banks around the world are waking up to it. So what's the alternative? Gold is one option, but gold has problems. It's heavy. It's hard to move across borders. It's slow to settle, and it's increasingly difficult to audit. Bitcoin solves all of those problems. You can move billions of dollars worth of Bitcoin across the planet in minutes. You can verify every transaction on a public ledger. You can self-custody it with nothing more than a hardware wallet and a seed phrase. For a finance minister or central banker trying to protect national wealth outside the reach of geopolitical rivals, Bitcoin starts to look less like a gamble and more like a strategic necessity. Now here's where it gets interesting. Most central banks aren't going to hold a press conference and say, "We bought Bitcoin." That's not how sovereign wealth moves. These institutions operate with a level of secrecy that most people don't appreciate, but they can't hide everything. And that's where on-chain data becomes your edge. One of the strongest signals you can track is exchange outflows. When large amounts of Bitcoin leave exchanges and move into cold storage wallets that never transact again, that's accumulation. It's not a trader. Traders move their coins. Long-term strategic buyers park their coins and disappear. We've seen unusual patterns of exactly this kind of behavior throughout 2025 and into 2026, with wallets holding enormous amounts of Bitcoin going completely dormant after acquisition. Another signal is miner behavior. Historically, when miners stop selling their Bitcoin and start hoarding, it signals that sophisticated actors with long-term conviction are influencing market structure. Miners know something about the future demand curve of Bitcoin that most retail investors don't. When they stop selling, pay attention. There's also something called supply shock. Bitcoin has a hard cap of 21 million coins. Around 4 million of those are estimated to be permanently lost. A growing percentage is being locked into institutional and government custody. When you run the math on what's actually available to trade on the open market, the number gets surprisingly small. If sovereign buyers are competing with institutional buyers and retail investors for that limited supply, the price implications are almost difficult to comprehend. And this brings us to the historical parallel that doesn't get talked about enough. In the 1930s, when the United States government decided to back the dollar with gold, they effectively created one of the largest sovereign demand shocks for a single asset in modern history. The gold price didn't just go up. The entire monetary architecture of the world reorganized around that decision. Countries that held gold had leverage. Countries that didn't scrambled to catch up. We may be witnessing the early stages of a similar reorganization. Except this time the asset is Bitcoin, and this time any country with an internet connection can participate. Several small nations move first. El Salvador made headlines in 2021, but in 25 and West, the pattern expanded. Nations in Southeast Asia, Africa, and Latin America began treating Bitcoin as part of their reserve diversification strategy. The larger economies are more cautious publicly, but the quiet signals are everywhere. Regulatory frameworks that protect institutional custody. Government-linked entities appearing in large, over-the-counter trades. Sovereign wealth funds in regions known for geopolitical independence quietly gaining exposure through structured products. This matters for you as an investor because government-level adoption is a completely different demand driver than retail speculation. Retail traders are emotional. They panic. They sell when they're scared. Governments don't sell their gold reserves when the market dips. They hold. They accumulate more when prices fall. If sovereign buyers are becoming a structural feature of Bitcoin demand, the volatility profile of Bitcoin changes over time. Not immediately, but directionally. So how do you position yourself to capitalize on this trend? The most obvious answer is the simplest one. Own Bitcoin directly. Not through a derivative, not through a futures contract that can expire. Own the actual asset. If sovereign buyers are accumulating, you want to be on the same side of that trade before it becomes obvious to everyone. Second, watch on-chain analytics platforms. Glassnode, CryptoQuant, and similar tools give you access to the same data that professional analysts track. Look for exchange outflows. Look for long-term holder supply metrics. Look for sudden increases in large wallet accumulation. These aren't perfect signals, but they're some of the best forward-looking indicators available in any asset class. Third, pay attention to geopolitics. The countries most aggressively moving away from dollar dependence are often the most motivated Bitcoin accumulators. Watch policy announcements, regulatory moves, and central bank reserve reports from countries like the UAE, Saudi Arabia, Brazil, and various Southeast Asian economies. What they do with their monetary policy tells you a great deal about where they think the global financial system is heading. Here's the bottom line. Central banks spent decades dismissing Bitcoin. Now some of them are buying it, not because they had a change of heart about crypto culture, not because they suddenly love decentralization. They're buying it because it solves a real problem. It's a neutral, unseizable, verifiable store of value in a world where trusting your political rivals with your country's wealth is no longer acceptable. This is one of the most significant structural shifts in the Bitcoin market since institutional investors entered in 2020 and 2021. And just like back then, most retail investors will realize what happened only after the price has already reflected the new reality. The smart money moves quietly. The signals are there if you know where to look. And now you do. If this kind of deep macro analysis is useful to you, hit that subscribe button. We cover the signals that most channels miss. Drop a comment below telling us which country you think will be the next major government to officially disclose a Bitcoin reserve. And share this with someone who still thinks Bitcoin is just a retail gamble. It's time they updated their mental model.